What's going on, traders? Hope everybody's having a great weekend. Wanted to go ahead and post an updated video and some analysis on the futures markets, the E-mini S&P 500 ES, as well as the NQ, the NASDAQ 100 futures market as well. I'm going to be taking a look at some longer time frame charts as always, some daily charts, and some day trading levels that I personally will be watching for this week. We'll also take a look at some other data points that I like to use to help gain some confidence in what we might be in store for this upcoming week. In addition to that, we'll also look at some of the economic events for this week, keeping an eye on those for any major market movers. And of course, if this is your first time joining the video, don't forget to subscribe to the channel. Comment down below, helps a lot, and I really appreciate it. All right, so let's take a look at the economic calendar for the week of the 17th and see if we have anything in store that we should be aware of. All right, Monday. We really don't have too much for market movers here, so I am not too worried about anything on Monday. Tuesday the 18th, not too much here that is really going to be moving the market, so I'm not too worried about that. But Wednesday is really the main day for the week. We have the FOMC rate decision coming in at 2 o'clock, and we have Powell, of course, doing his speech at 2:30. And I think the market pretty sure on what they expect the Fed to do. So as it's kind of been for the last couple of rate decisions, it's really going to be just more important what Fed Powell says on Wednesday at 2:30. Initial jobless claims on Thursday, March 20th at 8:30. Definitely will be paying attention to that as well. And then Friday, there is no data, so we are free and clear on that front. All right, with that out of the way, let's start to take a look here at ES and see what we can take away from the daily chart, from the weekly chart. And gosh, we've had 4 red weeks in a row crashing through this area of demand that really needed to hold. I think we had been talking about, I'm pretty sure, we've been talking about those weekly lows from the 13th, and that was really the key break that caused us to start to really crumble. And we did have, of course, that kind of M pattern as well here forming on the weekly that ended up bearing fruit for the bears lower. Now we're at a really interesting spot, right? Now we're certainly not getting oversold conditions quite yet on the weekly. We were watching for a while those overbought conditions, and we really actually on the weekly never got up there on ES, but I do know that on the monthly we had been keeping an eye on that monthly reading, which still is overbought, but finally now just starting to show weakness in this indicator here, but still overbought, which is interesting to me with a reading of 10.4, but we can see the momentum here starting to shift and turn red. I think it's also interesting, even though the month is not finished, we did close, or we have breached the monthly 9, which is interesting, and have not seen that for a while. Usually though, this is a type of a seasonality thing, and it is very possible, in my opinion, that this ends up turning into a larger wick and we end up closing back above that monthly 9. That would not surprise me, but I will say if we close the month below the monthly candle below that 9 at 57.41 as it stands right now, well, that would be not the prettiest picture, and I would really start to think about coming in and possibly testing that monthly 20. It's interesting here, we've got a nice 3-month balance too that I'm going to keep an eye out, which pretty much lines up with that 20. So if we do continue to sell, and of course this is way bigger picture, this is all the way down at 53.81, so nearly another 300 points or so to the downside, but we're not going to put the cart before the horse, and we will see if in fact we do close below that monthly 9-period moving average. Just something to keep an eye out on that front. All right, let's get back into the weekly really quickly. Excuse me. And the main takeaway here, is again, we have broken that weekly low from back in mid-January, bringing us down. Now I've got basically 4 weeks, right? All this started in the end of September. 4 weeks now of downside. Can we start to really talk about some of that counter trend rally? In my opinion, yes, we are really getting to that kind of point. And we did see some of that on Friday with ES being up, I think just over 100 points. NQ, I think, was about 300 points. I don't remember quite off the top of my head. But either way, there we had a nice counter trend rally for the bulls on Friday. But of course, they are not out of the woods yet, right? What would actually have to happen, bigger picture, for us to really start looking more constructive on the weekly? Well, of course, we're going to have to recapture those prior lows. So I'm going to be paying attention to that, see if we can start to get a weekly close, anything over basically 5,800. Okay, I have 57. I mean, if we want to get exact here, the low is 5809. So actually, although as much as I love that whole number, that's still 10 points. I mean, VIX is high, so 10 points for ES really isn't what it used to be at the moment, but we will move it up just a little bit. All right, I got it there at 5805. I'm okay with that. So I'll be watching to see if we can get any type of candle closing from the weekly perspective, over in this area, and that will start to neutralize, right, the trend just a little bit. And I think that would be a great step in the right direction. But of course, what can happen as well, right? We see the counter trend rally come up, push into this area, right? Previous demand, now supply. Sellers come back in, and we just start to head in. And of course, as we've been over many times, usually at that point, first target is always trying to match back towards those lows. So very interesting situation we have right here. Are the short trades going to still be there intraday? Certainly, but as far as any type of a swing trade, I mean, if you aren't already on the train, there's no way that I would be jumping in on any new money shorts at this current juncture. Now we have filled this gap down here, so I was watching that as well between the week of the September 16th and September 9th. So filled that gap, and we actually closed basically right at the high, right almost in between this gap is where we close. So I think that's a little interesting as well. Maybe a little bit more continuation back up into the weekly lows from the third. So I definitely would pay attention to that as well. I think if we do start to recapture those weekly lows from the third right here, and it's also the highs from back in August to the start of September, well, then I think the bulls have a little bit better of a chance. I'm going to say over 56, 72, 75. I think then we'll have much better chance of coming back up and retesting that 5,800. Although, as I mentioned before, the bulls still are vulnerable even if that does happen. So I think that is worth noting. Where would we possibly go if we started to head down lower? Well, let's get into a daily chart, and we will take a look at a different chart as well. One last thing I wanted to mention, the 9 and 20 really starting to show that cross here right at its apex, and we'll be watching this to see if we do actually get a cross here on the weekly 9 and 20, which would not be good for the bulls. We are also below the 50-period moving average on the weekly, also not a good sign. So keep an eye on those two. And of course, I mean, let's when we're talking about that counter trend move, right? I mean, look how far we are away. I mean, the low was basically 5,500 for the week, and the 9 period moving average and the 20 are basically, like I said, matching right now on the weekly, all the way up about 400 points higher, right? 5,900, 5,905. So it's going to spend some time either consolidating or with that counter trend rally, giving these moving averages a chance to kind of catch up with price and move like so. And it'll be very interesting to see if we see these moving averages come right up into the supply zone, double confluence for a potential short trade there. So we'll have to see how that develops. All right, let's get into another one of the charts that we had been working on, and we will, no, it's the wrong one. And we will, here we go. And we will flip into the daily chart now and see what we can take away from that view. We've got a couple of other areas of demand I will be watching if we do end up heading lower. All right, let me move my, give me a second here. Okay. Now, I will say one encouraging thing I am noticing right off the bat coming on the daily chart is now we are in a major oversold area here on the daily. Didn't make it there on the weekly, but you can see here on our Shark Momo that we are getting readings. What is this? Almost negative 12 on the oversold reading here, and we're starting to get a little bit of a curl with a little bit of green coming in, showing a little bit of momentum. So I think that is the first thing that is looking a little encouraging for the bulls, and that is good. All right, so I do have another area here. You can see this prior area of balance, which we broke out over, right? Came back and retested. This is all the way back from 2 summers ago, 1 summer ago, yeah, 2 summers ago, and we also had a reaction here back in September, right? So I have this zone. We've got 55.30, 55.06, 54.81, really the last stop for me there. And if we start to break below that, well, then watch out below. We could certainly sell down a bit more into the 54.40s. I don't have any levels here, but I'm kind of looking at the lows here from back in May. So that might be another area where we could come down to if we are to see any selling come back in to the markets. So I'm going to mark off this zone just to have it as well, 54.30. I would be shocked to see if we just continued down, to be honest. Again, I'm more in the camp that a decent sized counter trend rally is in the works. We were mentioning how far price was from the moving averages on the weekly, and we're starting to catch up with the 9 here on the daily a little bit. It's sitting at 56.83 half, but the 20s all the way up at 5,800. So that will be interesting to see whether or not this 20, if we've got a date with it. I mean, I do think regardless whether we consolidate, it's going to give also this moving average some time to move down as well. So we'll see how that ends up working. But look at the steepness of this drop here. And, you know, when these things get too steep in either direction, that's when really things kind of get out of balance. So I'll be watching very closely. On the daily chart from this perspective, what do I want to see? Right, some closes over 56.30 here. I think that would be good. Then we can talk about testing that daily 9 at 56.83. We start to get over that, up and under. Okay, then we can come into 57.15 area, and we could start seeing trading a little bit more up into this zone, right? But any of these areas here could still be potential short entries for the bears and people that are trapped long and who want to get out of their position. So there's going to be a lot of framework, or a lot of structural damage that's going to be need to repaired before we can really start talking about anything meaningful for the bulls overall. But that being said, I'm also keeping an eye here. Look at the 200 period moving average. Now this one's the SMA. The other two are the EMAs. But the 200 here, SMA, is starting to cross under the 20. So that is another thing I want to pay attention to. If this starts to curl over, and kind of do this, that's just another level of confluence that the trend here for the bears overall is getting stronger. Another thing I do want to mention is that, remember, when we're in a downtrend market, the counter trend rallies can be very, very powerful, and you can get in this short the pop mode every single day, and what can happen is that gives you that false sense of security. And it might have happened to some of you guys on Friday, where you were looking for that turn because we had seen it so many times, and it just never really came on Friday. So just keep that in the back of your mind, that the counter trend rallies in a downtrend are vicious, very strong, and you just can't get lulled into a false sense that the short's always going to be there. There will be a time for it, of course, and as I mentioned, if we do get that counter trend rally coming up into this next area of supply, well then sure, I could be potentially more interested in that type of trade, excuse me, but you have to time it right. Personally, I think Monday, St. Patrick's Day, what's the color of St. Patrick's Day? It's green, so I probably will be still kind of focusing on the long side a little bit, all jokes aside, on Monday, to see what we can do. But I'd really be interested in it more, again, if we can seeing price trading back over 56.30, where we close it. Oh, we're only closed about 3 or 4 points underneath, so it's not that far. So let's see what Globex opens up with on Sunday, and then maybe we'll have a little bit of a better idea of what might be in store. I mean, certainly I think that 5,700 isn't unreasonable for the markets to retrace up into. All right, I think that's everything I wanted to go over on the ES daily chart. So let's now take a look at some day trading levels that I will be watching for this week, and let's get into that. Okay, let's take a look here. From the more granular scale, we're looking at a 30-minute chart here of the E-mini S&P futures. One thing I am really liking here, closing above VPOC on the 30-minute at 56.17. That is good. We're getting the 200 starting to move and cross underneath the 9 and 20. This all looks good to me. So really, what am I going to be watching from this perspective? Well, I think that if we start falling back below, certainly 5,600, but 56.15, I'm going to say we got the 20, the 30-minute 20 at 11. So maybe it'd be a little bit safer to say 56, under 56.10 could lead us back a little bit lower. I mean, that's not that far, and down to the 55.95. Interesting spot there. So you know what, I think really what I'm going to be looking at is under 56.15. I'm going to get a little bit of cautious, right? Because right now we're in a bit of a, still bearish of course, but a little bit of a neutral, right, type of stance. Maybe a slight bullish to neutral stance. But what would have to happen for that to get taken out, so to speak? Well, they start to deny the trend, right? We're no longer going to be making higher highs, right? Under that 56.15. Under that, can sell back down 55.95. Under 55.95 for me, then I'm going to be a little bit more in that bear mode. We are no longer in any type of a neutral stance, and see about trading down 55.60 area. Can happen again, and if we start to break under that, well then I'd be watching 55.32 and back down to the lows here from from Thursday. So closer to that 5,500 once again. Again, the low was 55.10, basically 55.9 quarter on Thursday. So we will be paying attention to that. Okay, and you know what? I do want to see actually this on the hourly. Okay, so this is giving me a little bit more. Let me go back 10 days. This is giving me a little bit more hope here for the bulls. One other thing I guess I will mention is we really kind of created a bit of a balance, right? This here to me is balance, and I'm wondering if this is any accumulation going on right here, having bids being put in, and then we potentially get the markup move higher, back down, retest, and we do something like this. This would not surprise me to see this being some accumulation potentially taking place here, but we're not going to jump the gun. What needs to happen, right? Well, we need to see price back over. I'm going to say I've got 56.43 here, so anywhere 56.43, 56.45. Start seeing some closes and holds over there, some acceptance. Well, then I'll be looking to go back towards, I believe this is the CPI highs right from Wednesday, so I think we could potentially go back to that area, 56.77, and the actual data high was 56.75, so around in that area I think is very possible. If we see acceptance over 56.45, that would be what I would potentially be looking for. And also from the day trading perspective, another potential short zone, right? We've got the low right here, and then we've got the high here. What might we consider to happen if we come up and back test that, especially if this hourly 200 is moving down, giving us confluence right here, like so. We move in like that, price comes up, hits it again, reaction here, reaction there, right? That's something that I will be paying attention to. But I will say we start to see acceptance over 56.77 I have here, but I'm going to call it 56.80 just to because the bears have been so strong, so I'm going to give the bulls, they got to do a little bit more for me here. But over that 5,700 area here is going to be what we're talking about next, 57.11. But you know what really wouldn't surprise me? I mean, this 10-day hourly VPOC sitting at 57.57 wouldn't be out of the question in my opinion. We can also maybe take from the range from here, the highs that we have, all the way down. What's about 50% retracement of this? It would bring us to about 57.32. So I'll also be paying attention to that, a 50% retracement from where we came from possibly, up here, looking at that. So I'll be watching that as well. If we do shift down to the 5-day hourly though, that is putting us over VPOC at 57.25. So I think that's interesting, and this just looks like a nice flag here. We are kind of spicy on our overbought, oversold. Where are our readings here? I don't know why it's not showing it. We're overbought 11.44, so that's something to consider. But either way, again, acceptance over 56, 43, 45, and then we can look. I'm going to be looking for higher prices. Under 55.95, I'll be looking for lower prices down back into the 55.60s. So that's pretty much what I'll be looking for on ES, and let's see what we get. I mean, besides the fact, well, the markets, the ranges have been big, but as I mentioned, we're in this balance. VIX is extremely elevated. We're in this balance, but we've had a lot of moves. And this technically, although they have been big swings in the market, as I mentioned, really it's a balance, right? We haven't been really making, we made the new lower low here, but now we've come back up and we're still trading in the prior day ranges, right? Back from Tuesdays. Here's Tuesday's price action, Wednesday, Thursday, right? So it's an inside, right? This whole week. So let's see, because if we really start to get some buys and start to push out of the outside of last week's highs and range, well, then we're going to go ahead and make a moonshot a bit higher. Or, of course, the other option is we come back towards the lows and break 5,500, and then it's not going to be pretty. So we got to be ready for either scenario. But like as I mentioned, personally, I'd be probably looking a little bit more towards the long side. So we were talking about on Thursday on my Twitter about that counter trend rally possibly coming in, and we did get a bit of that on Friday. So that was nice to see. And you know, we're just so extended. So you know, it's not you know, too hard to figure when this potentially would happen. And you know, of course, timing it is the hardest part of it. But I will mention, you know, we are overbought here, so I'm going to be paying attention to that as well. All right, let's get into NQ and see what we can take away from the tech sector. See, and this is just a blank chart on the hourly, and this is going to be, you know, we have our balance here. Again, if we start to take out these highs, I wouldn't be shocked to see us back at least 1900, 19,950 area. Very possible we come down into these lows of this 30-minute bear flag, so I'll pay attention to that. All right, let's get on the daily, or let's get on the weekly though, and see what we can take away on our blank chart. Something I wanted to point out here on some of these trends that we have broken on the channel. Okay. So last time we had this trend and we did break, and look what it actually led into, right? Much bigger move down to the downside. And from the looks of it, does history repeat? I'm not sure, but either way, we've got a very similar situation with a long time bull trend here, finally breaking, channel broke. So also from this view, just from that potential quote unquote better short entry, right? What could we also potentially expect? Right now, so it's good. ES and NQ also kind of a weekly hammer here, for, you know, not perfect, but a little bit. We'll come up, watch for back test of the trend, and that also can, or the trend channel break, and that also can set you up for a nice risk to reward on the short. And especially looking at that 9 and 20, these will come down a little bit without a doubt, and you're probably going to get some confluence with this move, come up, back test the weekly 9 and 20, and maybe a short opportunity there. Either way, I wanted to point out this channel and show you guys what happened last time we broke one with some strength under the 9 and 20. Once again on the weekly, same scenario here. So we'll see. As I mentioned before, usually the starts of March, seasonally, this is seen in the markets. So the last 2 weeks are usually a bit more positive. So let's see what we get. And here NQ is up, let's see, just over 400 points on Friday. So again, that's how you can see the vicious moves in both directions when we are in a downtrend. Okay, so just be aware of that. So I just wanted to point out this chart. But let's go back to our blank chart here. All right, so another thing I am watching, very important here, these highs, these weekly highs from right back in last March. And look what happened. See, this last year was a little bit weird in the sense that we ended up getting the sells in April instead of the start of March, which was strange. But, you know, this also, the chart did look the same here. Let's see. 1, 2, 3, 4, 5. Now that was much nicer hammer. And then we had 2 weeks of green, one more before we tapped back over. So I would just, you know, again, it doesn't always work out like this or exactly the same. But why wouldn't we see maybe this type of scenario once again with price coming up here, retesting, heading back. Now, of course, we got another nice weekly candle here, and that's when they flip back to the bull side. But this scenario seems like it could very well play out, so pay attention to that, though. All right, so what else is going on here? Well, we're just going to go over it very quickly. Now, we had that same structure break here that caused the breakdown, just like in ES. I think these are the 13th lows again. Yes, they are. So that low that is going to be key to pay attention to is going to be basically 20,700. Bulls need to recapture that for any type of hope. We might just end up, if we do get a retrace, I want to watch the weekly lows from the 24th. That is another area that I think could be interesting that we end up coming into. But bulls are still, of course, vulnerable until we start seeing some candles start to close back in this area. All right. And what else is another area here that I'll be paying attention to? If we do sell down these prior highs, as I mentioned, right, this area here, as another possible spot, back the highs from last March, 18,705, all the way down 18,181. So I'll be watching that as well, if in fact we do really start to get more sells coming in. All right, let's get into one of the charts that we have been working on, and the daily chart here. Okay. There we go. All right, so the bull's basically defending the value area high here on the 3-year. Yep, value area high is, what is this one? Hold on. Why does it say 104 here? Oh, okay, sorry, I was looking at the wrong one. Yeah, basically 19,100 is pretty much the low and the value area high where we found the lows and bounced. You can see this prior area of consolidation here, up here, which I had marked off for some demand, right? These highs, which we were supported by. You can see we had areas where we had reactions here multiple times. Here's on the sell side, obviously buy side, sell side, and buy side, same. So the 9 sitting at 18,885, so watch out for that. Certainly can retrace and come into that. But what would need to happen, right? Well, we're talking about this daily balance. Now, same thing here. It's super oversold, excuse me. Would I want to be short in the hole here? Not a chance. But what's going to have to happen, right? Well, because we do have a nice balance area here, which we were kind of talking about earlier, right? We just have to really shift the market structure. I mean, this you could go technically, by this 19,790, but I would say that since we kind of had a double top from back on the 11th and the 13th, that might be a little bit more interesting. So I'm going to watch that 19,700, right? Going to need over that for sure to hold over Friday's highs. I think really is going to be the key there. And what did we hit? The high of 19,740. So let's get a daily close over 19,745, and I'll feel pretty good about coming up and retesting that daily 9 sitting in the 800s, high 800s, 19,884. And this, of course, is probably going to move down a little bit. It's also very possible that we still see just consolidation range, right? In here, whoops, in here, if we just end up coming sideways and like this, well, what could we actually just be forming again? Possible bear flag. I would kind of be against that theory. I mean, that could end up happening, but I would be cautious about trading a bear flag all the way down here, being overbought on the daily, oversold on the daily, excuse me, with the moving averages so far away. Not really something that I'm interested in, but you can see how far price is here from the 20, the 20 sitting all the way up at 20,455. So that is quite a ways away. These are going to need to catch up, and we'll have to see probably some type of another a higher, a lower high be put in, whether that's going to be coming up and trading up back into 20,000, which I definitely think could be a potentiality. 20,065, 20,200, another area which could show us sells, or all the way back up 20,300, another area as well. Check out the lows from back in October here. So for me, bears are still in control and can fight all the way up to 20,300 in my opinion, because once we start to recapture these lows from back in the start of November, the end of October, well, then we're going to start to neutralize that trend just a little bit. But of course, what do we really need to see, right? We really need to see price start to hang out up here. We see price start to hang up here and certainly recapture 2100, then I think we can get a little bit more bullish overall. But until that happens, everything right now is just a lower high, excuse me, lower high being put in on the daily chart. So let's just keep that in mind. So again, watch out under, I will say under the 1900, the 19100. If we start to break under that and then we break under the figure, I'm going to look at 18,850 as the next low, matching up from back in the start of September as the next point that we may trade down into. The 200 crossing the 9 and 20 a little bit more aggressively here on NQ, worth noting. All right, let's get into some day trading levels I'm going to be watching for this week. Okay, very similar situation. Overbought here on the hourly, but over VPOC, looking good. My line in the sand. Where's VPOC's going to be? Basically just under the 19,600. So I think if we get under 19,595, I think under that, watch out. We do have the 20 though, sitting at 19,555, but I think under that, under the figure there at 600 opens the door back up for the bears to come down, potentially to test that 20 on the hourly. But if that gives up under 19,550, I'm going to call it, watch for sells back down, maybe another 100 points back into 19,487 area, and under 1945, well, then definitely going to be picturing a bit more bearish from there. That's going to be pretty much the line in the sand for me. If they start to break back under 19,450, I'm going to call it, we could see sells all the way back down. Of course, the figure at 400, but seeing about coming back into around the 19,330s, I think would be the next area I would be paying attention to. So what has to happen for the bulls, right? Let me plug this in. All right, the bulls gonna need to get back over 19,740 here, right? We're talking about those highs from Friday. Really, I would really like to see if we're over 19,740. Okay, I'll start to feel a little bit better, but I want to see over 19,800. We get over 19,800, that's going to be good. We're going to be taking out, right, the CPI high and these lows. Then we can come trade up probably another 100 points. Why wouldn't we come retest the hourly 200 here around 19,900, 19,905, this area? So we start seeing trades here, something like this, we'll start to really neutralize that trend, and also breaking, I didn't mean to delete all that, breaking over that balance, right? That's going to give us the real market structure shift. We break over, come back, retest, and we can head for this next area here up in that 19,915 possibility. Over 19,915, well, then I'm going to be looking at the big 20K. Watch for sellers there at that whole number, psychological. But I think if we get over 20,034 possible, and then maybe up into 83. So anywhere up into that zone, I think we can get this, boom. But watch out here, because we could see sellers start to come in and fight back in that area. We'll have to say, of course, that if you were bold, you could short right up against this area here and look for that pull-in. That's another possibility. Or what can also happen is we look above this area, fail back under, come back up, and then hit the short like that. That is another play as well. You can pay, or I'm going to be paying attention to if that does happen. We come up, break, build up that trap long inventory, come back up short against it, they'll sell out, we sell, and it heads down lower. Okay, so that's what I'll be watching for there for the bulls and the bears. All right. Now let's take a look at some of the other charts that we like to look at. And where are we going to start? Okay, let's look at the VIX. Now I did post this also on my Twitter, I do believe. Or it could have just been in some other spots. But VIX, I was looking at VIX up here showing overbought signs on our Shark Momo, starting to peel off like I kind of anticipated. This 30 area has been a trouble zone here in the 28, anywhere from like 28, 29 all the way to 30, been a trouble area. Finally got that peel off back down into the zone. That's kind of what I was thinking. Still bears, volatility, I should say, here to stay as long as we stay over 20 and 19. I mean, so this can still pull in like so. That gives us more of that counter trend rally, and then we see a bounce. Maybe we only come back up to 22 and then it comes back down, or we come back up to around 23.5, and then from there we either sell or we sell down and then bounce, and then we come back up close to 25, maybe 24.80 area. So that's another possibility here. So here's some paths that VIX can take. Getting back over 25 certainly, or 24.80. Watch out, volatility will come back up, and we'll look to retest the highs again. So there's a couple of different maps that we've got for VIX. I posted about this, the put call ratio, on Thursday, I believe, noticing that we were starting to get, now these are the outlier extremes, right? This is like when we come down into 33 or like $1, $1.15. These are like, major buy or sell signals, right? When the market's completely offsides. But usually it travels in this kind of balance range between the 75, 60, and 90, basically. I noticed that we were up here in the 90, and I posted about this, that we're getting a little bit offsides on how many shorts were in the market, and now they did get dumped off and peeled off a little bit with that counter trend rally. So I was also kind of looking at this put call ratio on Thursday to kind of help give me that kind of view that counter trend rally probably would be coming on the in the markets here. So let's see, we're back down almost to the average at 75 again. So it'll be interesting to see how this continues to play out, but nice to see it coming in here. All right, everybody, a lot more people have been talking about a recession, certainly with the volatility, And what is going on here? The yield curve is continuing to re-steepen, and I would have to say that is not a good sign. So as long as this is now uninverting, that usually gives us signs for potential recession. So that is worth noting. For a while, it looks like it was going to reinvert again and get back under the zero line, but it did not. So that is interesting there. So we may have bigger picture pain in the economy coming up. All right, the one-day VIX couldn't really get over that 31. Same spot here from back in November. So another area of confluence saying, hey, watch out for that counter trend move. And definitely overbought here. So let's see if it stays below 2160. Maybe we can get this back down to 15. And then we see a bounce back to the 2155.60 once again. That could be what happens. Let's look at how many stocks are trading in the S&P 500 above or below their 50-period simple moving average, and the bottom one is going to be the 200. Getting a bit extreme again into these low 28s, high 28s. Market usually has some type of reaction here. Boom, you can see here, and we started to see it here. Boom, huge counter trend rally, huge counter trend. Now this one did continue down lower, obviously, so we want to watch out for this type of scenario to happen potentially. And we got to see how much of this is all due to recession fears, tariff talks, things like that, versus just a seasonality dip, which we usually do see around this time. So here, a little bit of the bounce, but really meaningless overall. I'm going to extend this downtrend a bit. Okay, so watch out for this to pop up, hit the trend line, then head back down. Whether or not we break this 28% again, that will be interesting to see, but I see this potentially happening. Let's see if we get some readings up by 40%, 43% on the 50. Here again, 36% of the stocks in the market are trading above their 200. A lot slower calculations here, but watch for any type of bounce. This is going to be maybe we get to 42% here as well and then peel over. But either way, when you see these extremes, you don't want to be short in the hole here, and this is the perfect reason why. All right, new highs versus new lows. What are we doing here? All right, you know what? We tried to get over the zero line back in the start of March. Here we are again, basically matching it. I need to see this back over zero. That's going to be the first step. So until we start to see that, and it can even fake out, here we got over zero and then it went back under. So let's get a couple of weekly closes over the zero line. That's going to be a bit more constructive. But I will have to say, you'd think for how much down the market was, that this would still be low in like the negative 100s, and it's only negative 27. So I think that this is a little bit of a positive data point here for the bulls. Let's look at the junk bonds. What are they telling us? All right, no divergence here. So it's kind of just moving up as expected with the market. If these were looking lower, that would not be a good sign. But a little bounce and recapture here on these weekly trends. So that'll be interesting here. See if SPY can hold 560. The high from the 12th is 563. Is it? Let me zoom in here. Yeah, so 560. Let's see, $2. See if this can hold. Comes back, retest this trend line, and then boom, heads back up higher. That's a possibility. No divergence there. Let's look at the bonds, the rest of the bonds, junk bonds. Okay, what's going on here? 7-year, kind of flat. Nothing really. We've got the ratio, move the TLT and the 7-year underneath the 50-period moving average. You want that back over. TLT finally hit that 91, 92 area. We've been watching that 91.83 for a while. Finally got back up there. Came back down here into this 89.80 area support, or demand zone, I should say. Let's see if they hold over 88.80. 89.80. I think that's going to be key for the bulls. I will say that it could be looking a little bear flaggy here. We got our swing high, lower high, lower high. But as long as it kind of holds in this area, it's kind of just flat to neutral. Really, bond's got to get a solid close over that 92. Let's go to the old Dow and transports. Ooh. Well, that is ugly. Seeing a bounce here in the transports, but no curl and momentum on our Momo. Dow's curling a bit on it. Under that daily 200, I wonder if we've got a date with it. Yeah, bulls are going to need over on the Dow. Bulls are going to need over 41,825 for me to be a little more constructive on the Dow. The 200 SMA sitting at basically 41,959. So let's see over 41,960, 65. I think that'll be a good step for the bulls, but we are not there yet. Tons of work to do. We could have a date coming up into the 41,800s, maybe the 41,900s before we see a shift back down lower. And there's no real divergences here, so we're good there. Let's take a look at the dollar. Also kind of looks like it's accumulating, to be honest. A little bit of a inverted head and shoulders, you could say, here on the Dow, right? Or excuse me, on the dollar. Right, something like that. Need to see over 104. That really unlocks the key for the dollar. We can get over, come back in, come up into 104 half, get over that, come back, retest 105. Otherwise, we start to break under 103 half, and we'll probably trade back down towards the lows, towards 103.20. Okay, and let's look at the yields here. All right, kind of creeping. Still, what did we close? Oh, right at 43. All right, gonna need over 43 here, or hold 43, over 43.64. And the yields can probably get going once again. And to me, it looks like here's our swing low right here. Here. So we want this right now, at least when yields are going up, the market goes up. And when bonds are going down, the markets have been going down. So it's been inversed. So let's see what happens there. Let's look at the VIX futures. I believe they are no longer in contango. Oh, but trying to come back, but we are in backwardation either way. So pricing in more risk in the future. I think this is a little constructive on the VVIX though. Coming back under 100, back under 105. This is a bit more constructive. We're right at this 96.25, so we could, I wouldn't be surprised to see maybe a little bounce here in the VIX, but this still looks like, as long as it stays under 105, volatility could potentially continue to sell. You know what, I kind of want to, this looks a little better. So let's see, we need the VVIX under 93.50. That would be good for the bulls. But we still are in backwardation here on the futures markets and the VIX. So that is pricing in more risk. Let's look at the skew really quickly. Probably fell off a cliff. Yep. All right. So it seems to me that people are offloading some of the risk now, which is interesting. Kind of back in the normal range where we normally trade, so. Alright, nothing really there. Alright, I think that's everything I wanted to go over for this week's recap. I hope you guys enjoyed it again. Remember what we say at the end of every video, a prepared trader is a profitable trader. So thank you so much for taking the time with watching the video. Don't forget to subscribe. It means the world to me. Hope you guys like the video. Please react to it wherever you see it posted. And that's all I ask. All right, guys, take care. Let's have a great trading week and be smart for Powell on Wednesday. All right, take care.